Do homebuyers care if interest rates adjust by 0.1%? Fannie Mae recently revised their rate predictions for 2024, and they now show higher interest rates for the upcoming year. But if you actually look at the numbers, in most cases, it's only 0.1% higher than their previous forecasts. Why have so many people run with this headline as more doom and gloom for mortgage and potential homebuyers? In my opinion, this is going to minimally impact affordability, and as Barry Habib likes to say, the media is not a public service.
Listen, the media doesn't care about the truth. They don't care about you. They care about eyeballs because that means they can charge more money. So when you see stuff in the media, they're going to try and sensationalize it, and they're going to try and maybe put a shred of truth in there, but they're going to spin it to get you triggered for your amygdala, which is a part of your brain that pays attention when you are fearful so that you could recognize patterns and protect yourself in the future. That's the whole deal with the media.
Inventory increases again. And while this should be looked at as a positive for potential homebuyers and overall healthy housing market, we still have that crazy old uncle who says the market is going to crash. Let's first look at the numbers. We now have 497,000 homes for sale, which is 16% higher or 67,000 more than this time last year. But let's also look at this from a point of context. In 2015, we had over 958,000 homes for sale during the same time period. New listings came in at over 51,000, which shows a 15% increase over 44,000 the same time last year. For context, in the market crash of 2008 to 2011, the market saw 300,000 to 500,000 homes hit the market each week. So just because you see an increase in inventory, we're still a long way from a healthy housing market and a long way from that housing crash. If the interest rate on your mortgage is above 6%, this is for you. We talk a lot about the 90% of mortgage holders who have an interest rate below 6% and how interest rates have to go down for that trapped inventory to become available for new home buyers. But we don't talk enough about the 1.7 million people with an interest rate above 7%. Many of you were told, don't worry, you will be able to refinance right away and reduce your mortgage payment. But what you don't know is when is the right time and how will you know? Likely not yet. And if you can afford to, be patient. The right time for you might depend on your loan type, your loan amount, and your current equity position. All of these things determine the cost to refinance and how quickly you can benefit. A larger loan amount might need a lower reduction in interest because there's a greater savings. Just like a smaller loan amount might need to see a larger decrease in the current interest rate for it to make sense. Instead of waiting and wondering, let's help you identify when the right time is for you to take advantage of a decrease in interest rates. We can help you identify your individual situation and alert you when that time comes. That way you don't have to stress about timing the market perfectly. And there are so many different factors available, your rate doesn't have to be above 6% for you to benefit from refinancing. What? That was a good rip.